Benjamin Bill, you are partner in real estate at CMS France. Thank you for joining us on BiTV.
Thank you very much, Luc.
Your firm recently published the CMS European Real Estate Deal Point Study 2022, which draws on data from 2,200 real estate transactions advised by CMS in 14 European countries between 2010 and 2021. What are the main trends emerging from this analysis in terms of investor demand for real estate?
Thank you very much, Luc. Indeed, 2021 was a very interesting year because it's the first year after the start of the pandemic. So in our study, we have categorized the transactions either as offices, retail, logistics, or residential. And what we can say from a general standpoint is that the European investment market has largely recovered from the consequences of COVID-19 in 2021. So compared to 2020, the total investment is actually increased by 15% approximately throughout the 14 jurisdictions that we have analyzed. And in France, the level of investment was quite stable between 2020 and 2021. And this general recovery could be explained, for example, by ongoing good credit terms and partly also to the continuing lack of alternative sources of return. And if I may just summarize our main trends that we have seen in this study is that on one hand, as regard the asset classes, so office properties were still popular in 2021, despite all the uncertainties surrounding the pandemic and the hybrid use of the office spaces with home office and the renewal of the use of the office premises. So office properties lost a bit of their market shares, in particular to the benefit of logistics and residential assets. Indeed, residential and logistic assets have seen to be very robust during the pandemic and have seen to show almost full recovery of rent payments in those two asset classes. So we have seen the market shares of logistic assets increase. Today, it's at the same level as office transactions throughout Europe. And of course, as I stated, one of the key factors was the stable income that was generated. And also the benefit, and this is in particular for logistic assets, the benefit from the ongoing growth of online shopping. This is not a surprise for everyone. And this online shopping was indeed more boosted with the COVID-19 pandemic and the related closure of some retail shops, and which led to an increased need for delivery and distribution centers. Finally, just a quick word on retail. We have seen in the second semester of 2021 an increase of retail transactions, in particular for high street retails and retail spaces that could offer a specific experience for the consumer.
And so, from what I understand, investor appetite is still strong. How did this renewed demand unfold from a pricing point of view?
You're right, Luc. The appetite for in real estate investment is still there, and especially for as regards international investments, where I would like to differentiate, because on one hand, we have seen many cross-border transactions in 2021, but they are mainly limited to European investors. We have seen that intercontinental investors, such as from Asia or from the Middle East, have decreased their investment in 2021. I think this is mainly due to travel restrictions and the fact that it was difficult to conduct visits, diligences, etc. But in general, the appetite is still there. And as regards pricing, maybe one can differentiate, because on one hand, we have seen that the search for core locations has led to an increasing pressure on the prices, and thus we have seen decreasing yields on prime locations. To the contrary, some assets were less liquid than in the past years, mainly for two reasons, if I might say so. Firstly, the geographic location outside of strategic areas and with a lack of public infrastructure, such as transportations in particular. Secondly, We have seen difficulty in terms of liquidity for buildings that have a bad energy efficiency rating. This is the consequence, of course, on the increasing regulatory constraints, but also on the market itself, because investors have an increasing awareness to dispose of energy efficient buildings, offering the highest standards in terms of environmental footprints and comfort for the occupier. So prices are mainly driven by these two factors. And from a general standpoint regarding asset classes, we have definitely seen a price increase for logistic assets and more stability on the other asset classes.
Okay. And obviously, given the current economic climate, I need to ask, because with inflation and interest rates rising, what effects do you expect on investor appetite for property in 2022?
So regarding inflation, in general, real estate is considered as a robust investment in terms of high inflation because it more or less follows and integrates the increase of prices that we see on the market. And it should be noted that for investors that have rented their buildings, that in Europe, most of the commercial leases and the rents in commercial leases evolve at least partially depending on the inflation. So most of the increase of inflation is reflected at least partially, and not in all jurisdictions, but in about 2/3 of the jurisdictions on the rent level. Thus, we expect the rents to continue to increase, and the question will be, from a more macro perspective, whether at some point tenant will agree to this continuous rent increases, or whether this will lead to discussions between owners and tenants. On the second part of your question, which is more related to interest rates, of course, interest rates increase, and they have doubled, maybe even more since the beginning of the year 2022. But we should bear in mind that if we compare, for example, to 2007, which was an extremely active year in the real estate sector, interest rates were still twice or three times as high as they are now. So what I expect is not so much a problem on the investment market regarding interest rates as a price factor, but the uncertainty related to such interest rates. Because if you envisage to do a real estate project and you have some fixed pricing considerations to take into account, that's one thing. You issue your price and it works or it doesn't work. But if you have uncertainty, that's a different thing, because you will have more difficulty in establishing your business plan. This could lead to more difficulty. And if this were the only thing regarding uncertainty on the market, it would be fine, but it adds to two or three other uncertainties, in particular, the outcome of the war in Ukraine and how this will continue to impact our various economies in terms of energy supply, in terms of supply of construction materials. These are the main factors that we are looking at for the year 2022.
And a lot of puzzles on the horizon.
Yes.
Thank you very much for your insight today. And thank you all for joining us, and see you soon on BiTV.
Thank you very much, Luc.